Hey, welcome back to The Dive. Joining us today is the host of Crypto Critics Podcast, Bennett Tomlin. But before we get into it, don't forget about that subscribe button. Hey, Bennett, welcome back to The Dive.
Glad to be here.
Okay, so let's start at the beginning for our audience. What is Tether and why should the general public care?
Tether was founded in 2014 with the goal of being a token on the blockchain that would be backed by a single dollar in their bank accounts for every single Tether in circulation. And their goal was to prove this to the public via frequent audits to show they had the funds they were supposed to. People should care about Tether now because it is an approximately $65 billion pool of liquidity that collateralizes much of the futures and leverage trading in the cryptocurrency ecosystem and has never had any of the promised audits and has had several periods in its history where it has been unbacked.
Okay, so you mentioned in one of your recent tweets that some Tether is unbacked. Can you shed some light on this for us?
Yeah, I think the clearest way to think about it is actually to think about it as periods where we know Tether was unbacked. So from March of 2017, when Wells Fargo cut off Tether from their access to U.S. correspondent banking, until September 15th of 2017, when Tether finally got a bank account at Noble Bank in Puerto Rico, they had ostensibly no banking relationships whatsoever. They had approximately $60 million of their backing held in trust at the bank account of their general counsel, Stuart Hoegner, and supposedly the rest was held by Bitfinex and was accounted for by Tether as a receivable. So during that period, we know that Tether grew from approximately 50 million tethers to approximately 450 million tethers, yet they ostensibly only had the $60 million in Stu's bank account. So that period there, we can say Tether was unbacked. The other couple periods we're looking at are from the summer of 2018 until November 1st of 2018. During this period, Bitfinex and Tether had given approximately $1 billion of commingled client and corporate funds to a group of money launderers known as Crypto Capital Corp. Crypto Capital Corp stopped responding to Bitfinex's and Tether's requests for withdrawals, and so because of this, in order to hide this problem, Bitfinex started taking hundreds of millions of dollars from Tether's bank account to hide their effective insolvency. Because of this, during this period, Tether was effectively unbacked. On November 1st, 2018, Tether announced that they had a new banking relationship with Deltec Bank in the Bahamas and released a letter from the bank that said their portfolio cash value exceeded the number of Tethers in circulation, again suggesting that Tether was backed. However, on November 2nd, the day after this report was released, Bitfinex took hundreds of millions of dollars from Tether's account again, effectively making Tether unbacked. This continued until the end of February 2019, when Tether updated their terms of service and their website to basically make it so that now they could be backed by effectively anything. And the concept of unbacked for Tether became much slipperier. Now we are at where we're at now, where Tether has released attestations showing that approximately 50% of their backing is in unknown commercial paper. And so Tether no longer even pretends to be backed one-to-one by dollars, but is now backed by a variety of different securities and receivables in which we don't have a good view into what their appropriate market value would be.
So the big news of the day from Bloomberg shows that Tether executives may be facing a criminal probe into banking fraud, which was then followed by a response from Tether saying it's business as usual and they remain committed to transparency. What are your thoughts?
I think it is extraordinarily likely that at some point in their timeline of existing, Tether has committed bank fraud. There's a video from 2017 where then Chief Strategy Officer of Bitfinex and Tether, Phil Potter, was recorded in a whale pool TeamSpeak discussing how they had to play various shell games with banks in order to maintain their banking relationships. And so my belief based on that is that they were often banking under various shell corporations and names that were not their own and were likely misrepresenting to banks what their business was in. Relevant to this, Crypto Capital Corp, the earlier mentioned payment processor that Bitfinex and Tether used, has the principals for that have already been indicted for that same kind of bank fraud, where they were misrepresenting to various banks what their business was in. They claimed they were banking for real estate, but were actually serving as a sort of shadow bank for much of the cryptocurrency space. Tether's sort of non response, where they claimed that they were fully cooperating with law enforcement and this is business as usual, didn't really answer the central claim of the Bloomberg piece, which is that uh, Tether executives in the last couple months have received target letters from the Department of Justice to let them know that they are under investigation. If it's business as usual for Tether executives to regularly receive target letters from the Department of Justice, that is perhaps more troubling than they intended to let on.
Is it possible the recent spike in Bitcoin is related to certain insiders knowing about this investigation and selling their tethers for Bitcoin?
It's possible. I'm not particularly convinced. I think if there'd been a group of insiders who knew that there were likely to be problems with Tether in the near future, we would have seen the market dynamics persist. I think the more likely explanation is that a group of people became aware of someone with a large leverage short against Bitcoin and were able to successfully liquidate them out of that position, possibly by using some exaggerated news on Amazon's interest in cryptocurrency as a whole.
So, who would get the most wrecked if a tether related crash happens? How do you think the major players will respond to this issue?
Well, the people who would be most wrecked would be those who are fully holding stablecoins, right? Who are exclusively holding Tether, because that token would likely then go to zero. People who are trading, for example, futures on Binance that are largely collateralized by USDT, I expect would have problems. People who are holding their cryptocurrencies on exchanges that primarily denominate their pairs in Tether, I expect would also likely have difficulties and are very likely to lose a significant portion of money. Um, as a whole, I think it depends on kind of the failure situation. If suddenly every single tether were to be frozen or to in some other way be effectively reduced to zero value, I think that liquidity withdrawal from the market would have an effect on the market as a whole. And anyone exposed to cryptocurrency would likely feel that in terms of the damage done.
Okay, makes sense. So, you also discussed the possible links between the 2015 Bitstamp hack, the 2015 Bitfinex hack, and the 2017 Tether hack in one of your posts. When it comes to these hacks, are there strong reasons to believe they are inside jobs? And if so, under the assumption of a possible deleveraging event, would you expect to see more of these events?
It is certainly possible that they are insider jobs. I think there's insufficient evidence at this point to claim that they are, but some of the oddities surrounding them can contribute to that. Tether, for example, never really produced an explanation of what happened and how their keys got compromised, allowing the tethers to be removed from the treasury. Uh, there was a security report done after the Bitstamp hack that was not meant for public release, but did leak, and many people have read it. That seemed to have been a sophisticated phishing attack based on the security group's analysis. The 2015 Bitfinex hack is another one that's extraordinarily strange because, again, there's no information from Bitfinex afterwards as to how it happened. It happened the same month Raphael Nicolay left Bitfinex or left his role as CTO. And Raphael Nicolay, had previously bragged on Bitcoin Talk about how he was the only one who controlled access to the keys to that wallet and stuff. So it's certainly possible it's an inside job, but right now the evidence is ultimately circumstantial.
Okay, so changing gears here, what are your thoughts on the Stablecoin Act? Is it possible to require issuers to obtain charters and reserve funds?
I mean, it's certainly possible. I think the federal government certainly has the ability to pass that kind of legislation. I was lucky enough to talk to Rohan Gray on my podcast, Crypto Critics Corner, recently about the Stable Act. And I went in pretty skeptical of the need for some kind of narrow banking charter to handle this kind of money transmitter and came away increasingly convinced that it may be necessary, not just for stablecoins, but for e-money transmitters in general. And the reason for that largely comes down to these businesses act effectively for many people as a bank, where they end up with this implicit belief that the dollars represented in their account, whether those are tethers at Venmo or at PayPal, accurately represent a dollar that they will continue to have access to. And because these accounts are not FDIC insured, because they don't have the same type of assurances there, that promise is more likely to break than in many other types of banking interactions. And so after the conversation, I do think that there might be an argument that some kind of narrow banking charter for this type of depository institution could be the future of regulation for this kind of business in the United States.
As a data scientist, how do you weigh a piece of valuable information over unsubstantial data?
It's my general perspective on this is that you need to maintain a skeptical bent both towards your own beliefs and towards the piece of information. So I often find pieces of evidence that are very tempting because they confirm my biases about Tether and about Bitfinex and about the likelihood that these are fraudulent or possibly criminal organizations. But often the evidence is difficult to substantiate. It is circumstantial. It is possible to be explained by another mechanism. One example I'm thinking of would be the Griffin and Shams paper, Is Bitcoin Untethered, that looked at whether or not Tether might be manipulating the price of Bitcoin. Specifically, when reading that paper, my issue with it is the evidence seems very compelling when you read it, but they're looking at specifically the flows of Tether out from Tether to these various exchanges. And the problem is legitimate new money entering into crypto to try to buy the dip, to stabilize the price, to do those same things looks very similar to counterfeiting or fake money being printed and sent out from Tether to those exchanges. So without really knowing what the actual mechanism that was happening at Tether at that period, it's difficult to come to a really good conclusion about what that data really means. And so I'm often hesitant to go to, I take a lot of the data very skeptically we see in crypto because there's often not a real good mechanistic explanation of what's actually going on.
Okay, so before you go, for our viewers, where can they learn and find more about your research?
I am the co-host of the Crypto Critics Corner podcast with Caspianci. You can find that wherever you listen to podcasts. I'm on Twitter at Bennett Tomlin, and I blog at bennettftomlin.com.
Well, Bennett, thank you so much for joining us today and sharing some of your expertise with us. We'll see you next time. And to our audience at home, don't forget to like, subscribe, and share. We'll see you next time.